All right, guys, good evening, good evening. Testing, testing. Welcome to the aftermarket recap. My name is Carlos Garcia, founder and CEO of G.A.R Capital. It is 5 p.m. Eastern Standard Time here on Monday, January 10th, 2021. Thank you so much for joining me again. Bottom right-hand corner of your screen, little white logo. Click on that, turn on notifications, subscribe to our channel, like our videos. Really do appreciate it. If you hit that like button, it really helps the algos. And make sure to subscribe to the channel. We're trying to get to 10,000 subs. Fingers crossed in 2022. That'd be great. More great things to come. Little side note, if you guys have noticed on Twitter, I've been doing more live blogging of the market news and what's happening. So my focus is really there. Again, the Twitter will always be free. This YouTube channel will always be free. There's some ads you can skip here and there. No big deal. But again, at the end of the day, it is free. A lot of people always ask me, I want to be part of G.A.R Capital, but I don't want signals. I like to pick your brain. I got a lot of those DMs. That's why I say Twitter and YouTube. I'm here every day for you guys to decipher, comment on the markets, answer your questions. This is the free stuff, and it will always be free. So here we go. Dow Jones closed down 162 points. The Nasdaq turns green after being down 2.7% at the lows of the day. Wow. S&P down 0.14%. You would have thought the world ended today, but we bounced. The VIX only up 3.41%. Closed below 20. Interesting. Remember that 20 level I always talk about? Let's talk about the RSP, the equal weight ETF of the S&P, down 0.5%. So the S&P actually did better. Why? Because the tech did better than just the whole market. We're going to go over that. Small caps gained 0.35, lost 0.35% to 1532, but a nice bounce on this level here, right around 211. I was expecting us to get around 208. It didn't happen. We bounced right off there. Thank you, JP Morgan, for saying, you had Jamie Dimon saying that he's bullish on the market, bullish on the economy. JPM's chief investment, I think, analyst, Kovacsek, I'm going to butcher that name. He said, right now is the time to buy the dip. Well called, I guess. The dollar index gained 0.26%, 95.96. The 10-year yield, 1.78%. We got as high as around 1.82. Then it kind of came down a little bit. Gold gained on GLD, up 0.30%. Silver up 0.68%, 2076 on silver ETF. High yield credit gained a little bit today, 85.94. Investment grade credit fell slightly, 0.09%, 129.60. Taking a look at the futures market, crude oil did slide a bit, 0.60%, 78.43 a barrel. Gold futures, 0.22% to the upside, pretty in line with GLD, and silver gained 0.41%. Gold closes above 1,800 an ounce. And taking a look at crypto, crypto did break below 40,000 on Bitcoin, 39,550. Now it's not 41,787 on the hourly here. It is testing the 100-day moving average. I'll go ahead and show you 100-day moving average here on Bitcoin. Would love for it to break, but again, really for us to get out of this funk, I want to get above that 200-day moving average on the hourly of 43,800. I did buy some Shiba today, but that's automatic, done. I did buy some stocks today. I bought some Caterpillar. I bought some Costco. I'm finally a Google shareholder. Praise the Lord. Finally been wanting to buy it. Bought it this morning. And I also bought Qualcomm. So I bought 4 stocks. All 4 are part of the top 10 stocks of 2022. I want to own them all. I'm happy about them, owning them. And there you go. So they did fall this morning, but they bounced slightly. So I'm happy about it. Again, I'm a long-term investor when it comes to that. Anyways, taking a look back to cryptocurrency land. Let's go ahead and refresh here. And then we'll take a look at the market in general. Still red across the board, 1.14% of the downside on Bitcoin last 24 hours. Ethereum gets back above 3,000, down 3.3%. Taking a look at my crypto portfolio, I think the lows I hit was right around 149,000, but now I'm at 153,853. Granted, at the peak of this portfolio, I was at 240,000. So I'm down 90,000 from peak. But that's okay. I'm still holding, still buying. You can see my recent transactions. About $25 a SHIB. Not going to light the world on fire, but I'm okay with it. I just want to accumulate every week consistently on crypto. That's how I do it. That makes me comfortable. If you guys like it, cool. If you guys don't, that's fine too. Let's go to groups and see what worked and what didn't. Let's go to the groups here on FinViz. One day relative performance, healthcare gained nearly 1%, technology gained 0.32%, communication services up 0.31%, And that's it in terms of green in the market. Industrials took a slide, down 1.13%. Cyclicals down 0.81%. Utilities down 0.72%. Utilities, materials 0.72%, excuse me. Consumer defensive down 0.6%. Real estate down 0.57%. Financials and energy down about 0.5%, respectively. So let's take a look at the heat maps of the S&P. So Apple eked out a slight gain. Microsoft eked out a slight gain. Google gained. Thank you very much. Qualcomm was red. Didn't work. Costco down 3%. That's fine. But Google was the biggest purchase I did. I only bought 2 shares. Not the end of the world. Again, it's a higher ticket item, let's just say. Tesla gained 3.03, leading the cyclicals. The rest, Nike and apparel was down. Starbucks was down. Chipotle Mexican was down. Chipotle Mexican Grill. Adobe finally bouncing a little bit, down up 3%. Oracle up 2%. Intel up 3.31%. Some of the banks, Wells Fargo gained 1%, but JPM kind of flat. Citibank gained about 0.38%. Visa, MasterCard, PayPal, the payment processors taking a hit. Industrials, UPS taking a big hit, down 2.9%. Honeywell down about 1%. On the healthcare front, you can see UNH up 1.40%. Remember, it tapped 500 at one point, so a little bit of a slide. J&J down 0.49%. Merck gained about 2.5%. Disney down about 0.78%. Netflix down about 0.22% today. So you can see the actual kind of the greens more skewed to the technology side. Cyclicals took a hit except for Tesla. Healthcare all around mostly green. But other than that, industrials took a hit today. Interest rates did slide a little bit. So there you go. Let's take a look at the market action in terms of Emini futures. You could see here, if we go ahead and expand it on the daily, you can see we flirted with that 100-day moving average and it bounced very, very fast in a sense. You can see only down 0.11%. Now we're hugging that 50-day moving average. So again, my buy level, again, this would be a 10% correction from peak, would be 44.01. Now we haven't tested the 200-day in about 2 years since the COVID 2020 meltdown that we had. So the 100-day moving average has been kind of the holding pattern for the markets, tend to be a good buy level. We broke it below in October. I thought maybe we'd retest that level. We did not. We didn't even retest the December lows. We flirted with the 100 and we bounced. So maybe we get continuance. The problem is, or really the thing to worry about, guys, is the simple fact that we have CPI on Wednesday. I thought it was tomorrow. It's Wednesday. And then we have PPI, Producer Price Index, on Thursday. So a lot of the things I went over, I did some market notes on Twitter. Feel free to take a look at that. I also posted it on Instagram. The issue out there is there's a lot of leverage in these high beta names people went all in on. And what happens if you have leverage? If it goes down, you come up with cash, hence margin calls. And now we're in an area in the market where we really have 2 big things. We have the Fed and we have COVID. So the question is the Fed going to raise rates? Yes is the question, is the answer, obviously. The next question is, how much will they do it for? How much will they do it? So Goldman Sachs is predicting 4 rate hikes of 25 basis points, which is about 1%. So again, if we had a 1% increase in interest rates throughout the market, would that really tank the market? Does that really affect Apple, a Microsoft, a Procter & Gamble, a Johnson & Johnson? Probably not in the grand scheme of things, but in a short-term sense, again, can these companies still remain healthy even with current valuations? That's the key. The key here is, in a rising rate environment, does the earnings line up to match the current valuations? So CPI is important, but the earnings season is the big one. The earnings season starts in about end of January, early February. So that's our Super Bowl. We need to make sure that these companies are still getting great margins, great EPS growth, good forward guidance. Then those valuations are justified even in a rising rate environment. Again, we fell about 5%, 7% on the Nasdaq. So again, you're going to get some dip buyers. You're going to get some shorts that are closing. That's natural. But again, this kind of movement today was a roller coaster ride if you were a trader. A lot of what we did today was just sit in our hands until the end of the day. We got into IWM calls. We got into QQQ calls. So we got QQQ calls. Well done, team. Sometimes you just have to wait. So the final point of my monologue is, the key here is not interest rates rising in itself. It's 2 things. How fast do we do it? And the second thing is, do the stocks with these current valuations, Do they make sense in a rising rate environment? Yes, when you're at a 0% interest rate environment, yes, you can have growth stocks, no problem. Yes, valuations will be sky high because it's cheap to borrow money. But when things change, when the narrative changes, when the whole environment changes, and we start getting to a 2%, 3%, 4%, 5% prime rate, that's the rate that we pay, you and I, high credit borrowers, to borrow money. How does that affect real estate? How does that affect industrials? How does that affect banks? Banks will get more margin, obviously, but how does it affect the aggressive growth companies that need to borrow money to fund operations moving forward? They base their interest rates of borrowing, their bonds, on the current rate environment, the Fed funds rate. Always remember that. And that's the memo. Good morning, Carlos. Carmen says, think we have a turnaround Tuesday tomorrow for SPY and Q. Here's the deal with SPY and QQQ. SPY Qs is right on the 50. SPY is right on the 50. IWM is near the 50. I think IWM is a really good candidate for a little more upside. I think QQQ could break and possibly get to the 100-day moving average, which is around 384. I want to see how futures respond tonight. That's going to be something that I want to look at. Does Asia come in buying? Does Europe come in buying? That's what I want to see. If they do, we may get a gap up. If we do, the 100-day moving average, 219.60 on IWM, 384.97 on Qs. If we go to SPY, that would be 469.37. This is on the hourly. That's going to be that first resistance. If we can clear that, stay below 20 on the VIX, the dollar kind of stabilizes, and yields kind of get back to around 1.6 maybe, then we should have all clear skies for a little more of a run-up. But again, futures will tell the tale tonight. Good question. How do you feel about today's close going tomorrow? Bullish or bearish? I am bullish with this close. The VIX being below 20 to me is a win. And this price action that we had towards the tail end of the day was great. Again, the thing that worries me is the fact of valuations. Have we gotten too stretched? Granted, we pulled back. That's healthy. But again, do the rising rate concerns affect valuations? I'm more focused on CPI on Wednesday. I want to see what that number is going to be. If we can meet expectations, I'll be breathing a sigh of relief. If it's higher than expectations, that's when we get to worry, and we may need to pivot short term on more of the companies that are going to do well in terms of a higher rate environment or high inflationary environment. What did I buy today? I bought Costco. I bought a Qualcomm. I bought Google, and I bought Caterpillar. 4 stocks from the top 10 stocks of 2022. So again, I have them now. I bought all 4, and I bought some SHIB today, which I buy every week. So there you go. I have my 15K aside with positions now nearly 20%. What would you suggest to me to do? I'm tempted to buy one Amazon share, VOO, XLF, DCA, SoFi. I would say get VOO and call it a day. Get that to around 25K. You want to have that foundation in terms of an index fund, and then you start building your way up. I go like this. I say foundation of an index fund, VOO, SPY, whatever you want. And then the next one is your core holdings. Pick 5 to 7 companies that you personally do business with. Do you drink at Starbucks? Where do you pump gas? Who's your cell phone provider? What phone company do you use do you use Google? Do you use Apple? Where do you shop? Do you like to shop for a certain kind of clothing? I'm a big Nike guy. That's a core holding of mine. I love Nike. Are you a big fan of Instagram? Buy some Facebook. Do you shop a lot on Amazon? Buy some Amazon shares. That's what would be your core holdings. The next step up would be real estate investing. Doesn't have to be buying a house. It could be REITs, again, or you could buy dividend stocks. Again, we know dividend aristocrats. Type in Google dividend aristocrats. There's a great list of companies that you can buy that pay out every single quarter, every single year, and increase their dividends. Those are the ones you want to get. After you do that, then you can start getting into the speculative names, the Blinks of the world, the Rokus of the world, the Pinterests of the world. Again, that's such a small slice. And the cryptos. You don't want to have 100% in crypto. Obviously, you're going to lose your mind. But again, if you have the foundation set correctly, you build your financial house correctly with 3 to 6 months of expenses on site in cash for any emergencies, not much debt other than your house, I guess, and student loans. Student loans, I assume that your rate is pretty low. Then you're fine. That's how I would stack it for you. Shop, Amazon, Google, Microsoft, Palantir, any of these buys today. I did not buy any of those except for Google. So again, for me, I want to wait before I do anything else here. Again, I want to buy these names anyways. But those names, the majority I own. So I'm not in a rush to go ahead and buy anymore because I want to wait for earnings. I want to see if these earnings do coincide with the valuations here. So if earnings are higher and valuations are current, that means PE multiples will be lower. And again, that means cheaper. Right now, the S&P PE ratio is at 30. That's historically high. Median number for S&P price to earnings multiple is 15. So again, could be a reset. Again, we need to see that these companies that you're looking to buy, Shop, Amazon, Google, Microsoft, Palantir, they need to come with it. We need to see that, are they earning the money that we're investing in there? Are they beating expectations? Do they have EPS growth? Are their profit margins healthy? Do they have cash on hand? I want to see forecasts. I want to see EPS growth. I want to see earnings in terms of cash. That's what I want to see. IW moving averages are so flat, they're almost in the same line, right? That if you look at the daily, and IWM, it's basically flat-ish, but it did tap support. So that's why we went long on calls. Thoughts on calls on AMD? Let's take a look at it. AMD right below the 50. If it breaks the 50, which is right there at 133.72, I think it's worth a shot to possibly get to 135. I would keep it extremely tight. Let's see. I bought eBay calls today. Curious how it does if the SPY rallies tomorrow. Well, we know that eBay is high beta, but their PE ratios are low. So let's take a look at eBay stock. I'll read you the PE ratio currently. Their PE ratio right now is 354. That's $3 for every dollar earned. So they make money. It's not like they don't. And they actually pay a dividend. But I guess eBay is not something that everyone is in love with. But on a year-to-date basis, on a one-year basis, they are slightly up. Last year at this time, it started at 53.93. We are now at 64.57. It gained about 20% last year. Pretty respectable, obviously. But again, I don't think everyone really talks about eBay, but they're very cheap. Their PE ratio is very low. You can see it here, 3.54%. I just told you that the S&P PE ratio is at 30. So again, you're talking about eBay is trading 10% of the multiple of the S&P. So these are the kind of names that you want to start looking for in terms of looking for, I hate to use the word dumpster diving, but finding some good deals on companies that make money and are cheaper. I remember when Micron was trading at a 5 multiple, and now it's up. I want to see where Micron's PE ratio is. Micron's PE ratio is now at 14. It used to be at 5. Micron. How about in 1 year period, how much they've gained? 19%. Pretty respectable. At a 14 PE, that's 50% less than the S&P as a whole. Something to think about. Hey, you're welcome. Hey, cheers. When do you decide to dollar cost average, like 20% down, 30% down around the market, asking for my B-Tech talks? I would go by moving averages on the daily. If it starts slicing below the 200-day, or we start expanding to the weekly, start finding those pivot points. We'll do look at Palantir, for example. I love Palantir, mind you. Palantir did bounce nicely with the market, but again, it is below the 200. It is below the 100. So if I expand a little more, we'll go to the 3-year chart. Again, not much, but look at their IPO number. Was right around $8.90. Hey, sub 10, I would love that for Palantir. But they got to show me something. I got to see their earnings. They need to be showing that they're making money. What do you think about Emini? Emini, I don't know much about this company, but looking at it here, Mercado Libre, looking at the hourly, nice little bounce back, still was down. It's below major moving averages on daily, like most high beta. But again, look at the 3-year chart. That's a good level to buy, right around 884. The real inflection point or your pivot point or breakout was right around 795. That could be a good level to probably add some more. Not all dips are created equal. Don't buy every single dip you have because you'll just run out of money. Again, find a deal. Treat stock shopping like you would Christmas shopping. You're going to shop around. You're going to find deals. You're going to look for Black Friday. You're going to look at the Sunday paper and look at the actual notice of, oh, this TV is cheaper here. Do some shopping. Do the homework before you just start buying blindly. And again, keep in mind, the high beta names should be on the top of your pyramid, the smallest part. If you remember the food pyramid as a kid, you know, candy, the good stuff up top, the one that makes you feel good, but if bad for you, think of that as high beta. Like, yeah, you'll make some high returns, but you're going to be like this roller coaster. Now, if you're the type of person that doesn't care and you're like, I don't care, I don't even check my account, I just want to buy them, cool. If you're going to be on top of it every day, you're going to basically be going crazy. And that's not a way to invest, in my opinion. What do you think about Emini? It's gone from 2,000 to 1,000. Again, I don't know much about the company personally, but again, I think if I were you today and if you wanted to buy today, I think around 873 to 800 is fine if you wanted to buy some more there, if you really like the company. All right, guys, we'll leave it there. Thank you so much for your time. GARcapitalfx.com is the website. Keep it locked on Twitter if you'd like the live blogging. If you just like the YouTube, catch me every day, 9 a.m. Eastern Standard Time and 5 p.m. Eastern Standard Time, doing the morning note and the recap. Here to help, here to answer your questions. Thank you so much for your time. Make sure to hit that like button for me. Appreciate your questions. Any other questions, type it in the comment section of the videos. I'll try to answer all I can. Thank you again, guys. Have a great rest of your day. And if you're going to watch college football tonight, I got Alabama to win. I'm not betting against Nick Saban. So there you go. I think Bama wins tonight. Good luck to everybody. Have a great one.